week's key events that we have observed in the market started off in the UK with the pound, a bit of a roller coaster. The bulls did take control after higher CPI at 2.9%, which is not good though, really continued to drastically rise. And then the bears then taking advantage after a softer average earnings in the UK, missing analyst expectations, people still not getting paid enough money. So without sounding like a broken record, guys, as I've said on a number of occasions, inflation really is outpacing wage growth in the UK, which is not good. As I say, it doesn't help consumers' affordability, not good for the average household in the UK. But then, once again, a bit of a tug of war, the bulls again dominating after a surprise from the Bank of England. Well, they didn't change anything in terms of rates or policy at the moment, but they did come out with quite a hawkish tone with their rhetoric. Did note in the coming months they could see a reduction in their monetary stimulus, so their quantitative easing. And second, as long as the economy remains on track and moving in line with the Bank of England's August quarterly inflation report forecast, then they could see rate hikes sooner than the markets had priced in. So really hawkish, and we did see a large amount of GBP strength across the board, gaining around 2 cents against versus the dollar and also against Japanese yen. So real advances. But for me personally, guys, I think the Bank of England doing a bit of manipulation here, just because of how drastic the pound has been weakening over the last few months or so, and essentially how damaging that could be for the economy. So I really think they're taking some potential external pressure on them, because if you look, again, in my view, the economy can't withstand a rate hike for the time being. One, average earnings are still too low in the UK, people not getting paid enough, so going hike rates is going to put people further out of pockets. Two, GDP is lackluster, it's still not where it needs to be. And three, as if this reason isn't enough on its own, but Brexit, there's still a lot of uncertainty. We don't know the implications of what this is going to have in terms of negative effects on the economy. We've already seen some signs of potential damaging of Brexit already, and even though we haven't officially divorced as of yet. So I think this could be a bit irresponsible from the Bank of England doing this so prematurely. Looking over in the United States then, at the beginning of the week we did see some aggressive dollar buying. Not one particular catalyst attributed to this, but there was some market chatter actually that the Donald Trump administration are gearing up for an announcement potentially for some tax relief, so that did help in terms of some of the strength that we have been observing in the dollar. And secondly, we did see a pickup in prices, a drop in PPI. However, CPI, the main real barometer that the Fed like to observe, that picked up to 0.4% on a month-to-month basis. So it's actually really encouraging, and it does actually put the dollar back on the front foot, rather, because it means that there's a bit of pressure taken away from the Federal Reserve, so they can start looking again potentially at tightening policy. So well, there's some hopes for them to be able to do that now that inflation has picked up, because that's one of the main reasons that they had slowed down in terms of moving forward with their rate hike. So could one potentially come at the end of this year? Lastly then, just looking at what's on my watch list at the moment, sterling yen, after the big bounce back that we'd seen, the bulls really flocking back into the pound, we are testing at a high of the end of December of last year of 2016, around 148.50. So keep an eye, if we do break and close above that for the week, could look for 160 plus over the coming months or so, a big recovery for the pound. And secondly, keep an eye on the dollar index, as obviously we did clear last week a lot of a support area, supply zone or demand zone rather, which was around 92.93. We seem to be creeping back into that area, but that could act as some resistance. If we can clear 92.93 area again, the dollar could once again regain some ground against some of the majors across the board. So other than that, that's it from me. Thank you very much for tuning in. I hope you've had a great trading week and have a smashing weekend. Thank you.